It's time to welcome our market master of the day, Raamdeo Agrawal, Joint Managing Director of Motilal Oswal Fin Svcs. He joins us ahead of the Motilal Oswal 19th Wealth Creation Study. Raamdeo instructs us, as per SEBI rules, to put his disclosure first up, so that plate will run up for you in a minute. But this is an annual wealth creation study. That's the Motilal Oswal disclaimer. This is an annual wealth creation study, and a much respected, much awaited one, simply because Raamdeo has a reputation for spotting the good and the best in the stock market. So his investment philosophy, which comes through in the wealth creation study, is much awaited. Raamdeo, good morning. Thank you very much for joining us.
Very good morning.
All right. Tell us what are the highlights of this study itself. I believe this study is called Biggest, Fastest, Most Consistent.
No, the study is titled, 100x, the power of growth in wealth creation. So it's a 19th part of the study. I've been doing it for 19 years. When I count 19, it looks to be like 2 decades,
Yes, it is.
So, this is an effort to upgrade myself.
When you say 100x stocks, what exactly were you looking for what was the theme in the mind when you started the study?
Yeah, so actually the idea of this study, when I started in October, was that what is the importance of growth in wealth creation? Because the changes in the stock price is made up of earnings change and rating change. So eventually you want from 100 going to say 1,000 or 10,000 or whatever. So what are the sources of changes? I mean, why 1 rupee goes to 10 rupees or 1 rupee goes to 100 rupees? So like Infosys is 4,000 times up in my own lifetime. This is that I got the stock listed. I saw the stock listing in 94 and 93.
91? No?
93. Okay, sometime in June 93. I think the offer was, I hope my numbers are right, 31.5 crores. It got listed at 50 crores because I think 95 rupees they offered. 145 rupees was the thing. It first traded 145. The market cap was 50 crores. Today it is 2 lakh crores, and I think they've given 20,000 crores dividend, and 25,000 crores will again come. So what I'm saying is that it's possible in one lifetime to make like this. I mean, this is not a company which people came to know only 12 months back. It's a happening thing, and along with that, the entire sector, like whether Wipro or TCS. So I think a huge amount of wealth has been created. And let me tell you in perspective, index itself is 100x in 30 years. This is a kind of record.
Okay.
In US, the Dow takes 50-60 years to go 100 times. I mean, today's 18,000 of Dow. 180 was sometime in 40s and 50s.
Okay.
Whereas index was 280 in 83-84. So it has just about taken 30 years. So the probability, see, these are difficult to get stocks. I mean, you don't get every day 100x. But what is required, I mean, the most important thing I learned from this is that you require vision to see these companies, courage to act, courage to buy. These two are still easy.
Yes.
But patience to hold.
Okay.
Because it requires 10-15 years of holding. And as you know, I mean, CNBC takes credit in seeing to it that people sell on profits, isn't it? So
we don't take credit. We just showcase them.
Advise them, yeah. So, even for me and everybody, it becomes very difficult to, I hope after this study, I become a little wiser and, hold it a little longer than I have been. But I have been blessed with, one stock where I actually... I'm still holding on. It actually has become 100 bagger. So it's not that it doesn't happen.
Tell us that. That's history.
No. I'm not supposed to tell you anything. It's a history. I'm like Hero and I was talking about. So I bought it 30 rupees. Today it is 3,200 or 3,100. So it has, and they've given me 1,200-1,300 rupees dividend. And so what I'm saying is that patience is required. I mean, all the big wealth has been created with vision, courage, and patience. Okay. So this is the 3 things which. I mean, I hope I'm guided by this, and I'm guided to my fund managers. They are guided to manage the people's money and recommend like that. But I think that's the biggest learning of this study.
Okay, Raamdeo, morning. Since the last time you came on our show, we spoke about a lot of stocks, and in your note as well, you write that Eicher Motors is the fastest wealth creator.
Yes,
and we're getting a lot of queries on our Twitter timeline. So I'm going to pose one to you. A gentleman bought that stock, when we spoke to you last. It was, I think, at around 8,000, and currently at about 15,000 bucks. The the question is, at what point do you take profits, or do you just hold because these are good quality companies and there's no problem with the management?
So our investment philosophy, as I now call it, is QGLP, quality, growth, longevity at reasonable price. So if there is a quality and if there is a growth, which both are there in this company, and there is a longevity of growth, because I mean the segment in which they operate is a monopolistic segment which is growing very rapidly. The truck story, Volvo story is yet to start. So you know, I mean, I would think that with whatever disclaimer, you know, Sabinal, that I mean,
you're not worried about valuations and all that.
Yeah, so is good. I mean, it's a very good company, and so. I mean, one has to be. I have seen one thing that everybody in the street is trying to value, and the only valuation tool they use is P multiple. I mean, I'm not saying that's a bad. This thing's a nice. If you don't have anything, it is a good one. But it times you in a high quality and high growth when it comes together, because people mistake at times quality for the growth. Quality is one thing and growth is another. When both of them come together, it's like an exponential
then you have
stuff.
A multi-bagger.
So no, it is exponential thing. You cannot pay any price, but you have to be far more lenient. What valuation can you give? Because this is a very predictable economy. I mean, I have seen in 25 years, and next 25 years, this economy is like. Very, I mean, 5% is recession in this country. So, you know, it's a very different underlying belt. So, growth company with quality. You have to be really.
I remember even Deepak Parekh saying that 5% feels like recession in India. Fair point. Okay, you told us what a fund manager needs as qualities: courage, vision, and patience. What do you look for in a stock? You generally said growth. Would you look at business? Would you look at management? What are the elements that your wealth creation study looked at? Can't you speak about the stocks that you identified?
Identified?
Yes.
I spoke one about Infosys in 93. And I did make money.
No, in this study?
This study, I don't think the predictive mode we cannot go. Clearly we don't want. And it's... See, let me just talk about the four qualities, elements. The first thing is, you need a relatively small company. I mean, most of the companies which have created more than 100 times in the last 20 years, I mean, running from 100, minimum is 100, it is running to as high as 3,000, 3,500 and all times. So, one of the characteristics is that they are small in size. By that standard, like 94, 95 and all. So they're not more than 600-700 crores then. So I would think today... They
wouldn't be the Sensex companies of that day.
Impossible. I mean, they don't know that Sensex exists. So these companies are relatively small, with a big vision, but relatively small at the early stage, and they are unknown. Actually, it has to be unknown, because the moment it is small, but known as a big thing, so people end up buying at some fancy price. So it has to be small percent operations as well as unknown. So that's one thing. Second, it has to have a very good business, and a business which you think has a growth potential, in the sense that very large opportunity size, and there is a profit in that business. See, in India, every business has huge opportunity. Even if you are a matchstick guy, you can...
clean drinking water has the biggest business.
But there's no money. So what you need is the business with a lot of profit potential. So we call it profit pool. So the profit pool in that business has to be very, very high. When a company you're looking at, say I start a business, say a bank is in banking you make like a huge amount of money. Banking is probably the largest wealth creating, profit pool.
Really?
Yes, it is about 70,000-80,000 crores. So in that profit pool of your 4 lakh crores, 4.5 lakh crores total profit, about 25% is from the financial services, banks, NBFCs output. So when a tiger comes in that particular pool, you have to be very, you should be watching. So Phil Fisher says in one of the book in 1960, the Way to Wealth, in that he says that 90% is management. When the company is small, 9% is business, everything else is 1%.
Oh.
So, at that time, you got to find somebody like Narayan Murthy. I mean, and Narayan Murthy was Narayan Murthy even in 93, 94, let me tell you. One speech you had heard him speaking for half an hour, 1 hour. I mean,
you're in no doubt about the management skills.
Yeah, so you get these visionary guys, like we have our Prime Minister now. I mean, you can't doubt that something extraordinary is going to happen.
So have you identified
no disclosures on
no disclosures
have
on
you identified any new Narayan Murthy's? Is it harder to find stocks now?
No, you have to see, your framework should be ready. See, the point is, the purpose of the study is to get the framework right. After that, the information will keep flowing by the news item. You go and meet people, you go and meet people in the parties, you go to meet one company, they talk about another company. So, I mean, but you have to be ready to receive the, process the information when it walks in. I mean, in quarterly results, the information walks in. Or say oil prices crash. I mean, oil bubble is burst. Now, what are the impacts of this? I mean, some company, if it is a permanent thing, there will be birth to some mega business out here. So, you should be able to figure out how exactly, I mean, when information walks in, when a company walks in, somebody tells you about this guy, you should be able to process it very quickly.
Okay. So you're looking, I wanted you to speak about two areas. You spoke about neglected stocks, and I'll try and revisit that.
Please, unknown. Neglected, unknown. See, just,
so neglected stocks
it's not a neglected is very different thing. Unknown.
Is that a basket to look at, neglected stocks?
See, neglected stock is one of the characteristics. First is, you got to get a terrific management and terrific business. Then you go for the unknown. Please go in that sequence, otherwise we'll...
no, fair enough.
So, yes, I mean, there always, if you know about something and which market is not bothered about, that's... See, I remember, whenever I used to buy stock, then what happens is that... I wish I could name some stocks,
no,
but...
You can exemplify.
So what happens is, say, I looked at Group Finance. Now, when I looked at Group Finance, it was 60 crores market cap. This we are not going long back, 5, 6, 7 years back, 10 years back. So when I looked at this stock, and 6, 7, 8 P multiple, HDFC owns it, mortgage opportunity is so big, you can't get a better management, huge unlimited opportunity in mortgages, and then the, I mean, but then no, the stock doesn't move. So you feel whether you are right or wrong. You know, is there something fishy about this company which you don't know? So what happens is that you are in a sense of disbelief when you actually hit the jackpot.
Okay.
And then
you would like to see yourself growing rich.
Yeah. So you have to have courage. That's why that guy says, one is the vision. So I was developing that so-called insight. And then you need courage. Boss, you're right. Go ahead and do it. So that doing it is still possible. But holding on to that patience is, I think, is as it is said in the book, it is rarest of the three attributes, and it is very rarely found among the women, and it never found among the men.
What, courage or patience?
Patience. Okay, we'll take that outside the studio, post the interview. But, you know, I just had one question. You were identifying a couple of themes for us, the crude theme. We were talking before about the recovery in the commercial vehicle cycle. What do you think could be the big theme? I'm not asking about stocks, just the sectoral theme in 2015.
2015, who knows? I mean, the biggest thing which is right now happening is the crude. I mean, we talked about shale oil and all that. We thought that $10, $15 will get. I mean, here it is just unstoppable. This is the biggest crash. I mean, it is bigger than Lehman crash, though it is not with the attendant bad this thing. But the countries where crude is the main thing, you imagine those countries, I mean, what is going to happen to their finances and all. But since we are very blessed that we were net huge importer, so we are sitting in and it's still $63. So, I mean, they're talking about 55, 50. I don't know where it is going to stop. So, I think this is the biggest economic event of the year. And I think the first will get a loss because of all the guys who have the petrochemical in their inventory on 30th September in their businesses. They will have unbelievable losses in the inventory in December quarter. So one has to watch out for that small event to go through. But the story is much longer. And after that, you are going to see the impact of it, because the impacts are huge in the sense that you cannot figure out where all it will impact. Packaging cost of the FMCGs, your motoring, because this country is impacted by the affordability. I mean, in America and all, okay, instead of $3 a gallon, you'll get it for $2.5 or $2. So the guys are not going to drive more because the oil is cheap. But here, it's a question of affordability.
Yeah,
so
but at the moment the government has not passed on the cheaper cost. Your petrol price is not 30% cheaper.
No,
your
it's
petrol
not,
is 5 rupees.
Over a period, because right now they're adjusting the inventory cost.
Yes.
So in next 1 month or so, it will be passed on. I don't think anybody will be allowed to profit here to that extent.
Okay, just a word on getting our viewers up to speed on the current markets. We've seen this minor 4% correction in the markets. Would you expect that in the next month or 2 or 3, the market could see a deeper correction?
It will be very good if it happens. So we can buy cheaper. Okay. I think this is the best thing which would ever happen for an investor. Please, there is a fundamental difference between investor and trader.
Okay.
This might probably be good news for a trader to buy, sell high and buy low. But if investor is there and he wants to re-enter the market and enjoy this bull run of Modi government, then he must better be sitting.
Okay.
Because if you want to re-enter, please don't sell.
And one final question which is very much brewing. How game-changing is GST? Would you tank up on anything if that were to come?
I don't know. Every day headlines are changing. Some day it is through, some day it is not through. So let it come. I mean, we'll talk about it after it is done. In what shape it comes, which is 0, which is 5%, which is 20%, what states can do. I think don't count it. I mean, just count the oil. I'm telling you, it is too big. Okay. Just focus.
Okay, one for the road then. Since you've spotted the oil theme, I heard you say packaging companies for FMCG.
Not packaging cost, I said, not packaging companies.
Packaging costs.
Companies will suffer.
Okay,
then what about pass on the benefit?
What about paints, tires, OMCs, all the beneficiaries of oil?
We have to now get on the road. We are writing the notes. I mean, we are over busy trying to figure out what is the impact, because it's a big thing. It's bigger than a change of the government, I'm telling you. Particularly if it is long lasting, in the sense that, it is because of shale oil, so the whole oil economics is bust. It's a different thing altogether. So if it is not a 1 quarter phenomenon, then the entire cost, because with this, coal prices slump, gas prices slump.
Yes, the entire energy.
So entire energy basket goes, which is the foundation of entire cost structure.
No, it's possible that this is a bit demand driven as
so the
well.
Companies, so the companies which have pricing power, so they can decide how much I want to pass on. Whereas the companies which are commodities, they'll have to pass on full. So consumers will benefit.
Fair enough. We'll wait for that.
Yeah.
Raamdeo Agrawal, we're out of time. Thank you very much for joining us, and I do hope the regulator changes rules. This would have been a much richer conversation if you had demonstrated it with the stocks you spotted. But maybe we'll get around that rule.
No, you read the report. That's good.
And we also spotted in your discussion with Menka, you spoke about your bad investment idea, which was central bank. That too has gone up 60%. So 60% returns are not good enough for you. Every return should be 100x, right? Okay, on that optimistic note, thanks so much for joining us. You have a good weekend.